World trade continues to fall. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Working through my morning stein of coffee, about to finish it, and I thought we'd have a look at this article from Zero Hedge and the famed and famous reporter Tyler Durden. Now before we look through this, it's discussing world trade continues to slide as the recovery sputters. Before we look at this, let's jump over to the Observatory of Economic Complexity. Now this is a fantastic website. It really should be part of most education curriculums. And here you can see different aspects of the Australian economy, and you can see lots of other countries. The thing I'm constantly worried about is our lack of economic complexity. That's to do with the sophistication and complexity of what we're exporting. We're not very high. We're not very high out there. So people are talking about great manufactured Australian goods. It's all a fantasy, everyone. It literally is a fantasy. We are great at exporting raw products. Coal, iron ore, gold, one of the biggest in the world. Now with the increase in gold prices, do you think that might increase the demand for the Australian dollar or our gold exports? And we're exporting them to a lot of Asian countries. China, Japan, South Korea, the United States is there. Even good old New Zealand. Exports are a big part of our economy. So we're exporting $248 billion. So we're the 24th largest in the world when it comes to the size of our export market. But it's not very complex, not very advanced. And look at what we're importing. Cars, refined petroleum, crude petroleum, medicines, broadcasting equipment. A big chunk of that is coming from China. Trade, import, exports play a big role for the Australian economy. Here, this is another website, the Marine Traffic Global Shipping, and you can just see all the different types of ships that are importing, and you can see, look, Port Hedland here, all from Western Australia, all the iron ore getting sent over to China. Here from Queensland as well, you've got the coal, you've got petroleum, you've got LNG coming from WA, and there you go, boom, boom. You can see. So Australia is a colony that's feeding resources to the rest of the world. And I'll just bring up trading economics. And we'll have a look at one aspect, which is the iron ore price. Now, iron ore is an important part of the Australian economy, a very important part. We can see here while that loads up, you can see iron ore is a $48 billion industry. And the price, oh, you got to love this NBN. Come on, guys, fix it up. Well, the price of iron ore is quite high. While that's loading, its impact on our country, well, is significantly going to affect one particular state. And here I have the operating mines in Australia in 2014 from the Australian Mines Atlas. Now, this is the latest data I could get. I'll turn them all on, and you can see we've got mines all over the country. I'll turn them all off, and we'll just turn on iron ore. You can see, just have a look at that. How many are in Western Australia? How many are here, right near all these ports, guys? And trading economics isn't working at the moment. Here we go. We can look at commodity prices, and let's have a look at all of them. Look at gold, 1941. It's doing pretty well. It's shooting up. People are moving to metals. Iron ore is at 110 US a ton right now. The Australian budget, the royalties the government assumes to receive from iron ore, is based on it having a $50 US a ton. So the higher it is, the better it is for our country. So in some ways, that's quite good. We're the biggest iron ore producer in the world. Number 2 is Brazil, and we're all feeding it to, well, big portion of it is all going to China, everyone. We'll have a look here. We'll click on this and just wait for the visualization to update. And we'll see 80% of it is going to China. There you go. So Chinese demand for our iron ore is important, and their demand will be fueled by their own internal spending and demand for their products, goods, consumers from overseas markets. So that's why global trade is very important. It flows through to our entire economy, and it affects all of our quality of living. So let's have a look at this article. New data published by CPB, Netherlands Bureau for Economics Political Analysis on Friday, reveals world trade fell 1.1% in May after a 12.2% plunge in April. Highlights from the CPB report indicate world trade continues to decelerate. World trade volume decreased 1.1% month on month. Growth was negative 12.12 in April. Initial estimates were 12.1, so it did worse than expected. Often that's the most important thing when reading, analyzing, or looking at any of these things. It's what people anticipate and how much worse the market actually is to the predictions. At least that seems to be how it goes in the stock market, isn't it? So world trade momentum was down 11.6%. Non-annualized, 6.9% in April. Initial estimates were negative 7.2%. World industrial production increased by 0.8% month on month, having decreased 8.5% in April. The initial estimate was negative 8.1%. So it's improved. Industrial production has improved, but it's fallen so much that that's going to take a while to recover. World industrial production momentum was negative 7.1%. It was negative 5.8% in April, and the initial estimate was negative 5.6%. So everything seems to have been worse than the initial estimates. To visualize the collapse in world trade, CPB published several charts showing world merchandise trade volume to industrial production volume, all suggesting the global recovery is far from a V. So we can see here, world merchandise trade volume, chart 1, level, 3 months, moving average. There we go. We can see that drastic move. Chart 2, last 3 months on the preceding 3 months. You can look at that absolute plunge for the world. Last 3 months to a year ago, plunging down. The industrial production, everything is going down. And the industrial production on the preceding 3 months. So there's the world, is the red. The advanced economies is the dark blue. Look at that. Look at the advanced economies, how they have plunged, everyone. And the emerging economies have rebounded somewhat. But we'd have to see what the definition of emerging economy is. Is China still considered an emerging economy? Their economic complexity is so much more advanced to us. It doesn't make sense. It really doesn't. So they're getting all these, these environmental perks and these, free passes. Where Australians, we're apparently the big boogeyman with regards to the environment and our impact on the world. When we're producing natural resources, there's no complexity to our economy. But, that's how the world works. That's how the world works. There's industrial production, volume chart 3, and you can see everything is falling down. Although the full impact of the pandemic is not yet reflected fully in trade statistics, it is expected to be very substantial, said WTO Director General Roberto Azevedo, who presented the trade report to its 164 member states on Friday. WTO said last month that Q2 20 world trade year-on-year could plunge upward of 18%. Along with slumping world trade, we noted earlier this week that the global recovery is running on fumes. Is there actually a global recovery? Is there even an anticipation of a global recovery? Do people, honestly, do people think we've bottomed out? Do they think we've hit the trough? How can we claim that when there's so much artificial stimulus on the economy, or do they not see it? The problem is we're extending out the pain much longer. There seems to be the habit now. We're completely unable to, we've got no resilience. People have no personal reserves. So the state intervenes and by intervening, they're actually going to pull out the suffering for a much greater extent. I need a shot of coffee here, guys. To get a better sense of what collapsing world trade means for global stocks, here is a world trade volume versus MSCI World. And we can see here, this is the exports volume index in orange. And here is the world in US dollars right-hand side. You can see that it's plunged and it's shot back up. The reason for levitation in stocks is because of the unprecedented central bank money printing. So this here is showing us money printer brewer right there. Is that natural? Worrying about fundamentals like companies making profit, even companies being feasible. That's so old school. That's so old school. I guess no one cares about that now. Does that look natural? If readers want a hint at what could come next, here's Gary Schelling, the president of Gary Schelling, who believes a 1930s-style depression in stocks is ahead. And maybe we'll look at that in another video. But what do you think, everyone? This is going to have an impact on the world, and it is going to have an impact on us here in Australia. Let alone the fact we don't even, our tourism industry is on its last legs. Our international education will apparently open up in January, we're being told. We'll have to wait and see. So as always, let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. Simply watching and interacting with the videos is fantastic. It helps the algorithm know that people like the content, helps it get spread. You can support the channel financially by joining us on YouTube or Patreon, using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin, buying our merch from HeiseSays, using Gold Pass from the Perth Mint, or supporting us via PayPal. Take care, everyone. Have a great day. I will see you all in the next video.